But there's one sector that has continuously been an underperformer in this entire year 2022. Now, the big question is, will it come out of the underperformance, or is the pain likely to stay? I'm talking about the IT sector. Last week, we did see about, how HCL Technologies has come out with a revised lower guidance. And this time, today, we're getting the news that global giant Accenture has now warned about a possible pullback in the client spending, has also shown some disappointment in the quarterly earnings as well. Now, what does it really indicate for the Indian IT majors, all the bellwethers, Infosys, TCS, Wipro, and the likes of these kind of stocks as well? They have all seen sharp correction of about 30-40% throughout this year. And now these fresh warnings amid the slowdown that we are overall expecting in the economies, global economies as well. Could this actually point towards a long winter for the IT sector? That's what we want to focus on. Rajesh, first of all, your thoughts on the Accenture's guidance that it has given, the numbers that have come up about, and the warning of the pullback of the client spending. Is that going to be a major cause of worry for the Indian IT companies going forward?
So we have seen, significant correction in most of the IT stocks, and if we talk about the IT index per se, the now IT index is near to its October low. And after this Accenture guidance, yes, there will be a hit on our Indian IT company also, as the client spending, they are showing concern towards the client spending side. So which is, directly linked with the IT guidance going forward. So looking at this guidance, we believe that some pressure is likely to continue in the IT stocks. Most of the IT stocks are also started reacting to this news flow, and again, most of the IT stocks are now approaching towards their October lows. So if at all IT index breaks below, like 28,400, 28,300 level, 28,300 level, then possibly another 5 to 10% correction we can see in IT stocks from the current level also. Even from a stock specific front, like TCS is now approaching towards its October low. So for TCS, again, 3180 is the crucial level. If it's break below that level, then possibly TCS can correct towards 3000, even 2960 level, which is the next major support area for TCS. If we talk about Wipro is continuously underperforming. Despite of pullback in most of the IT stock, TCS Wipro was not able to cross even 400 level, and again we are seeing since last 3 weeks there is a supply pressure in the Wipro also. And now looking at the setup, if it's continues to trade below 395, 398 level, then possibly Wipro can face furthermore supply pressure towards 370, 365, which is the next level for the Wipro on the downside. Even on the Infosys, now stock is trading below its a 50-day moving average, which is clearly indicating that weakness is there on the near term setup. It's a third consecutive week where Infosys is making lower low formation. So it clearly suggesting that there is a sustained supply pressure on the Infosys also. And looking at the setup, if Infosys breaks below 1490 level, then possibly Infosys can go down towards 1440 to 1420 level, which is the next important level on the downside. So most of the large cap IT stocks are clearly indicating that most of the stocks are trading near their critical levels. Another 1 or 2% downtick from the current level can escalate further more selling pressure, and we can see 5 to 10% correction in the continuation of this downtrend.
If you like the video, do like, comment, share and subscribe.